Hello Accounting 101 students. In this video, we're going to continue going through the Chapter 3 student review slides. In the first video, we started by discussing how to analyze business transactions in the tabular analysis format. We also talked about journalizing the accounting transactions and how to record journal entries. Now we're going to be talking about how a company would post those journal entries to the general ledger accounts. Posting is the process of transferring journal entry amounts to the ledger accounts. So first we have an example of a journal entry. On May 1st, the company has recorded a debit to the cash account, which is noted first on the first top line of this journal entry, and the amount is $15,000. And the company has recorded a credit to the common stock account, which is going to include $15,000 in the credit column. You'll notice that there is a reference number, which is very common for businesses because businesses will typically have more than one transaction in a day. So it is easier for companies to find their business transactions if they also include a reference number. It is not part of any of your Wiley exercises, but I do wanted to let you know if you were asked about a reference number to include it in one of the columns. So the process of posting involves taking the information from that journal entry and including this in the general ledger. And in this class, we use the T account format, which you can kind of see looks like the letter T with the name of the account on the top. We have the abbreviation DR for debits, which are recorded on the left side, and we have the abbreviation for credits that are reported on the right side. And regardless of what the classification is, the debits are always going to be on the left and the credits are always going to be on the right side. To post the journal entry information into the ledger, for cash, the company is going to include the $15,000 amount in the debit column on the left side. And there is a notation for the date, and generally, whenever there is an increase in your asset accounts, that will be noted as a debit. Whenever there is a decrease, it'll be a credit. So during the accounting period, every time there's an increase to cash, it would be an increase on the debit side. Every time there's a decrease in cash, it's going to be noted on the credit side. And the ledger is always going to have a running total, so that way you take your debits minus your credits, and you'll know the balance, which is normally going to be on the debit side. You normally expect to have a positive cash balance on the debit side. For common stock, this is classified under equity. So with our debit and credit rules, we have an increase in our common stock, which is noted on the right side under the credit column. And we also include in the date. So for our equity accounts, in addition to our liability accounts, we would expect the normal balance to land on the credit side. So a company that has common stock would always have their balance on the credit side. When it comes to your liabilities, you are going to incur liabilities as credits, and then when you pay off that liability, you would have a debit to reduce it. So please take some time to practice our debit and credit rules, and also for each of those transactions, you can practice including the dollar amounts on the debit and the credit sides in this T account format. What happens with this general ledger is that at the end of the accounting period, a company is going to get their total ending balance. And they're going to summarize that information, which brings us to our next slide. The trial balance is a list of accounts and their balances at a given time. and accounts are listed in the order in which they appear in the ledger. So there is a particular order, and the order of presentation in the trial balance includes assets, liabilities, stockholders' equity, revenues, and expenses. If the company has dividends, they would typically include that between the stockholders' equity and before the revenues. The purpose is to prove that the debits equals the credits. So in the trial balance, we have all of their accounts, we have all the debit amounts on the left side, and all the credit amounts in a separate column on the right side. And we want to look at the total, and we want to make sure that the total debits equals the total credits. When you have this trial balance, if these two amounts do not equal, this may help uncover some errors in journalizing and posting. And also, the trial balance is very useful in the preparation of financial statements because you can take your balances from the trial balance for revenues and expenses to prepare the income statement. You'll look at your net income from the income statement and consider any balances for dividends to prepare the retained earnings statement. And your assets, liabilities, and equity goes in the same order as the classified balance sheet that you learned about in Chapter 2. This is an example of a trial balance, and you can see on the left side, we have all of the accounts this company is using. We have the particular date that this trial balance is prepared as of, and the balances, whether they end up on the debit side or on the credit side. So for cash, which is an asset, because this is the first asset reported on the balance sheet, this is listed first, and you'll notice that cash, accounts receivable, supplies, and equipment are all asset accounts which end up with a debit balance in the trial balance. And that is the normal balance for our asset accounts. Then, when we look at accounts payable, notes payable, common stock, and retained earnings, you're going to see these amounts normally have a credit balance. Our retained earnings at the beginning of the period is going to be 0. As we go through the accounting cycle, we update this retained earnings statement at the end of the accounting cycle. We also note that dividends is going to have a debit, whereas revenues are going to have a credit because they increase the retained earnings, which increase equity. And then you see all of your expenses. They all have a debit balance. And at the end of this, if you add up all of your debits and you add up all of your credits, these two amounts have to equal out in order to continue with the accounting cycle. We use the information from this trial balance to prepare the financial statements. And the first financial statement a company prepares is the income statement for a period of time. So we have the month, and the income statement has the revenues. In this example, we only have service revenue. We have our expenses, and you'll notice a subtotal for the total expenses, and then we arrive at our net income. If you were to continue with this problem, you would then prepare the retained earnings statement. In this particular problem, we don't have a beginning retained earnings and we don't have dividends, but I will present the balance sheet. All right, so for the balance sheet, this is prepared as of a particular date in time. We start off our assets with the most current assets of cash, accounts receivable, and supplies. And you'll notice that our equipment is separately listed because this is a long-term asset. And we need to add our total current assets with our long-term assets to arrive at the total assets. And your textbook presents information where they kind of show information separately for the subtotals and totals. A bit to the right is just indented. This is not related to the debit and the credit columns. This is just to make it easier for students to see what is a subtotal versus what's a total. For liabilities and equity, we start off with our current liabilities, which is accounts payable. And then we have our long-term liabilities. This particular example wasn't very specific, but I included notes payable as a long-term liability. In your homework and online problems, you will be given some specific information when it comes to notes payable for the classification between current and long-term. And then you're going to have your total liabilities. You might notice that on real financial statements, sometimes they don't have a subtotal for the total liabilities. You can determine the total liabilities by looking at the relationships, because if you're given the total liabilities and equity, you can subtract out your equity amount to get to your total liabilities. And of course, in our stockholders' equity, we have our common stock, and we also have our retained earnings. Okay, so earlier I mentioned that we didn't do a retained earnings statement, but we actually do have dividends. I'm sorry I overlooked that. But for the retained earnings, you start off with your beginning retained earnings, you add your net income, and you subtract out the dividends to get to your ending retained earnings, which is shown on the balance sheet. If you didn't do the retained earnings statement, you needed to do this calculation to come up with the ending retained earnings. Otherwise, your balance sheet wouldn't balance. The student review slides includes some review questions that I recommend that you look at. But one of the most important topics to cover is that the trial balance has some limitations. The trial balance might have the numbers balance, but it will not uncover certain errors. So if you totally forgot to record a transaction, it's not going to find that. Or if a correct journal entry is not posted, it's not going to correct that. Or if there's a duplication, if a journal entry is posted twice. Also, if you have incorrect accounts, so if you recorded a journal entry or you posted it to a different expense account than what it's related to, it's not going to find that error. And also, sometimes you might have some offsetting errors where you have too much in one, but then it balances out with too much in another account. And if they're the same dollar amount, you wouldn't be able to uncover that error using the trial balance. Please take some time to go through the content and practice as much as you can on Chapter 3, especially with the practice problems that we have included in our Canvas modules. Thank you for taking the time to watch this video.